Welcome everyone to the Kendall Report. Well, it is Wednesday night. We had an interesting day yesterday, meaning Wednesday. We did see a drastic downdraft, almost going to some of the numbers I talked about last night. Actually did trade down to them and then just reversed as the buyers came in again. And it does appear that the algos and everybody are trying to really build a story of everything you can imagine, peak inflation, the Fed is going to pivot, you name it. They're coming up with all the stories right now. So the bid is fairly strong. Before I go any further, make sure you hit the like button and subscribe, and make sure you hit the notification bell so you'll know when I come live. Yeah, so let's talk about a few things. And I think it was interesting as the market's unfolding. I'll go through the 3-day trade, which came off of the reversal that we got the other day. That's still live and working, and there's some metrics that we're going to run into, I think, by the end of the week that could maybe set up a little bit of a mini top here. And I was hoping that we'd get maybe a couple days down. We haven't gotten any down yet. We had intraday down. We actually ended up closing down just slightly. S&P down 0.2, NASDAQ down 0.25, and the Russell was down 0.74, but it was the strongest the previous day. So basically some rebalancing going on as far as things go. But we did have a slightly negative day, and we're seeing a little bit of a bid overnight right now. I didn't have a lot coming up. I will talk about a couple things that I think are significant, but for the most part, I think it's going to be a technical review tonight. There's not a lot of new things coming out. I'll just go through the economic stuff that came in yesterday. Mortgage apps, what I've been telling you, down 14.2%. Anything housing, construction, you name it, that's where the soft spot is in the economy. And it's probably what the Fed wants. They know that these higher yields, I think the average mortgage is pushing like 6.2% now. So it's definitely going to cause some issues with the housing market. Everything else continues to do pretty well. We talked about, the JOLTS report yesterday coming in a lot lower, like 1.2 million less. So they're starting to see some softening in the economy, but, maybe in employment and everything going forward here. The market's going to refocus on all the employment numbers here coming in. We've got claims coming out tomorrow, expect to be 203. Last week it came in under 200. Continuing claims were down again, 1.32. See if those continue to come down. I said the mix and the conundrum here is really the difference between some areas of the economy and the actual labor markets around everything. Just real quick, ISM non-manufacturing came in yesterday, just steady, nothing there at all. So like I said, housing is the weakness. And that's a big element of the economy. And it hasn't really gotten any contagion or seen any traction going across any other industry so far. So, we've got the OPEC guys coming in with 2 million barrels less. Didn't get much of a bounce in oil, but we got most of the bounce the day before. But if you look at the XLE, I went through that strategy in PortfolioXpert last night, and that strategy is doing quite well. It's up almost 5%, I think, since Monday. So just in 3 days, but energy was up 2.7. The hot spots yesterday, energy, semiconductors had a good day. So there is some good spots. The Apples and the big techs had a decent day as well, in spite of being, somewhat of just a slightly negative day. Like I said, we're seeing a bit of a bid right now. NASDAQ up 0.5%. Right now, NASDAQ futures up 56.75, and the E-minis up 15.25, printing 38.09. We had 11 was the high. 38.11 was the high. And I'll show you some of the indicators and what the prediction and the forecast is for the PPMs and what that means for the markets here in just a few minutes. Database following the script. I'll show you here in just a minute. Everything is basically following the script of at least a reasonable low trying to set up here, and it looks like we're going to continue to evolve inside of this pattern that's been set up here. So let's go ahead and just get into the crux of this thing. I don't really see anything exciting at all. The only thing I'll mention is we did see, like, the S&P was down 1.8% and recovered most of it, actually went positive, and then just fell back right at the close of the session. We saw some selling. So let's go ahead and take a look at the database. So quite a few buys coming in. I mentioned a couple numbers between 12 and 18%. We're at 16.58% bullish right now. We have 1,669 new buys, only 54 sell signals. So definitely you'll see in this line here, it shows the sentiment for tomorrow is bullish. Just a big buy-sell ratio on both sides. The one thing that I would say is that the most bullish would have more 3.2 buys than 1.2. If you on the far left, on the far right of the screen, you can't see. I'll just tell you that about 60% of the optimized or the best breed models for the database is 3.2, and only about 40% on the, let's see here, 36.92% on the 1.2 model. So a lot of these trades that are coming out here are a little more aggressive. They're not the best of breed models, but overall we are seeing this database move up toward that 18%. Next targets to watch for 16 to 18%. All right, we'll start off on the trading view, looking at the indicators, and we have, I've got quite a few of the indicators up here. We have the market grid, we've got the fib projection tool, we also have the STX buy signals up here, and then all the PPMs with the forecast that's coming out of this. And these are being released later tonight. By the time you get in the morning, if you bought the indicators, you should just have to refresh them, and they should all be up there. If there's any issues with that, we'll drop an email either way that these things are being released. So that's going to be done after the broadcast tonight. But what we're seeing here from the predictive standpoint and the forecast is that PPM1 is expected to continue up, which means, and I told you this last night, what it's indicating is that the 10-period moving average is going to start to rise. And we indeed did that. It's up 0.098, 0.25 is trend. It's actually being forecast just in the next two sessions to be at 0.42. So it says that we're going to go into trend mode. And what should happen here with the PPM2, it should kind of go flat and start to accelerate as well. And that will set up the tone for a penetration of the 21-period moving average. And I'm just going to put this out there, is that the 21 is going to be the pivot in this market. It's at 38.30 right now. So penetration above that. I'll go over to TradeStation. We'll go through the market grid here in a minute. But just looking at this, all of the projections that are coming out of, and the forecast coming out of the algorithm is suggesting that we are going to see a continued improvement. And this, as I showed you last night, all of this started last Thursday, started projecting that the markets were going to improve. And so it still looks like there's some traction on this. My thoughts were last night that we could trade back down to the 10-period moving average. So let's go over and take a look at the TradeStation here. And the projections here, let me go full screen for you. The projections here for right now, the 38, it's changing because of market rally. So 3831.21 is the actual value here. The R1 is 3821, R2 3852. If we can get above that 3830 number, we'll definitely print R2. S1 is 3766. The low so far, 3791. Don't know that we get down to S1, but that would be the range. S1, R2 expected for this market coming into tomorrow. It does look like there's going to be a bias to the upside, and everything's going to start to build as we come into the employment numbers on Friday. And, you know, as I mentioned earlier, we did see the claims come in under 200,000 last week. I don't know if this is going to continue or what's going to come out of here, but if we do come in stronger than expected and a fewer amount of claims, that might be bullish. But as I mentioned last night, the real story is really the bad news is good news, and probably we're into all news is good news at the moment. So bad news is good because that means the Fed isn't going to be aggressive. Good news is just confirming that things aren't as bad. Okay, so no matter what comes out, it's probably going to be, the reaction is going to be good to it. Yesterday, like I said, we didn't really have any material news coming out, but as we come into the rest of the week, it's definitely going to get more material from that standpoint. All right, I'll bring up the TradingView stuff with the indicators here, and you can see all the labels off to the right here. Looking at the same kind of configuration across the board here, PPM1 expected to start to turn up. We're already up at 0.10. You'll see the white number over here. PPM1 is plus 0.10, and it's being forecast the next couple of days to get up to 0.21. And in theory, some further advances as we come into. I'm going to draw something in here, and this is the same with all of these indexes from the standpoint of what's likely to happen. And I was doing this in the live room today, so I thought I'd share this with you. But what we're expecting to see is that this 10-period moving average is going to turn up. The 21 is just going to flatten out, and then ultimately over here somewhere it will start to turn up, and then we start to get these crossovers. And meanwhile, the major resistance will be up here on this 40. So we should see, I'll just draw in some arrows what is likely to come in here. I would like to see a little reaction here, maybe tomorrow or the next day, and then this where we get one of these 1, 2, 3 patterns I talk about all the time. If we get up into here, you know, we still have like the 200, everything's declining. And if I go to weeklies, as I showed you last night, we've got a substantial amount of downside pressure yet. And that's very evident when it comes to on the weekly, and the 10-week moving average is very similar to the 40-period moving average here on the daily, on both the S&P and the pattern and on the NASDAQ. So we're looking at 12,304. That number is coming down just slightly every day. So we still have a pretty decent downslope. And in fact, the downward pressure is likely to stay on that longer term average, which is going to be the key level here. So let's go back to TradeStation here and look at the NASDAQ. I'm going to go to the weekly, and I'll show you exactly what I'm talking about here. Weekly, this is the 40-week average, 13,262. And like I said, the downward pressure should be very evident here. We're still down minus 0.89, so that's a big-time trend. So even if we manage to get sideways here, we have resistance around here at We've got resistance right here at 12,301, 12,387, both on the PPM 1 and 2 are still down a lot on a weekly basis. So that's going to be your first level. And the maximum that we could get up to at the moment would be coming into this declining 21, which 40 period moving average. But the 10 period moving average right now is still down minus 1.09. And that's going to be your major resistance, 12,387. And it's dropping about 200 points per week. So it'd be 12,100 as we come into next week. So definitely some overhead resistance coming. So most likely all we're seeing here is just a bear market rally. We're going to come into these numbers and then we should get a setback. It's possible that we just do a five bar trade up where we just go up for the entire week and then we hit some of these resistance points. Then we get the pullback. So I'll try to call this the best I can as we go through stuff. And those of you that are in the live room, you'll be able to do that. And just so you know, if you want to join, you can do that. You can go to and buy the indicators. I would go to the Kendall Report /indicators and go there and get that, and you get a free access for 30 days into live room. So that starts at 1 o'clock to 4 o'clock every day. Not every day, Monday, Wednesday, Thursday. So we'll be there tomorrow. So you can join and get in there for tomorrow and start to learn. And like I said, the new algos on the PPMs will be released tonight. So you're going to get the best of the best. We've got a bunch of other stuff coming out and probably over the next 30, 60 days max. There's some really cool stuff that's coming out. So anyway, we'll go ahead and let's take a look at the Russell. Just going to stay with the weekly charts here for just a minute. We're actually trading almost up to the RXT level, 1804. We printed up to 1782. We're getting close at S3, 1772. So we traded just above R3. I said S3, R3. We're getting up to that maximum. This is a weekly chart again. And you can see the PPMs look way different here on this. Let's take a look at the predictive. Let's put RTY up here. And you can see a similar configuration with the difference here is that the PPM2 is actually much stronger, suggesting we've already traded through that PPM. That was signaled 2 days ago that we would trade through the 21 period moving average. Now firmly in target zone right now is a move up to the R3 level. So look for that. That's going to suggest, like I said, we could get, this is weekly. This is actually the fourth week up from the low on this pattern. And I'm talking like it's weekly. This is daily. I apologize. So this is like I said, we get 5 days up on this pattern. And that would take us right into this 40 period moving average or the 10-week average. I suspect it's about the same here. Let's just bring this down just so we can see it. Yeah, the 10-week is about the same value there at 1851. That would be the maximum that we would see here. Next, we'll take a look at treasuries. Treasuries continue to bounce around in that range. I talked about that last night. We got down almost to the STX level, 3.52. We had a low of 3.56. It was just in between S3, STX, and we got a bounce there. Now we're back, running back towards 3.87. We're at 3.78. We could see a little bit more upside. The PPMs are still very bullish here, and my expectation is over the next 2 weeks, we're going to have this 10-period moving average rise into the market grid pattern. So it's going to get more interesting in about 2 weeks, and that'll put us a little closer as we come into the November Fed meeting. So I'll be watching that very closely from the standpoint of what happens here. But the trend on yields is still up. There is a floor. Most likely we've seen it for this week, and we'll continue to just kind of consolidate here. Stick with the weekly just for a minute here on the crude oil. And we've gotten 86.56 is the 10-week average. It's down at 1.12. We're trading above the RTX, which is 86.56. So this news that we got out of OPEC is definitely being reflected here. And one of the things that is positive in this pattern is the PPM3 is up at a 0.71, and that represents this green line here. Let me just expand this a little bit. You'll see where my cursor is here. The green line is where market wants to get up to. This is what I was talking to last night, as an expectation of between 90 and 92 on the upside. And if we get that kind of move and we close above RTX on the weekly, then we should see just some sideways movement here. Let's go over to the daily for a sec and just kind of look at this pattern. And basically, we're coming into some fib targets here. There's fib target 1 was 85.24. We penetrated there. 88.67 is target 2. So we basically have hit that. And yesterday, now we're trading at 87.95, and fib target 3, just to bring that up, is at 90.80. So a lot of things are pointing towards a $90 range. And then I think what we end up getting is some sideways movement. This 200-day moving average is up here at 90.56 as well. And it's still advancing or sloping up. So I think market wants to get back above these levels from the standpoint of just the overall trend, especially on the weekly basis. There's going to be a stability here, and I was talking about that over the last several days, and we're definitely getting that. And if indeed, I would say OPEC doesn't have a great reputation of doing what they say they're going to do, but I suspect that they would like to see this thing go, and they're not really helping Brandon out a lot here, so he's not very happy about that. But the point is that they're going to protect the flows here. This Nord Stream situation is still up in the air and what's going on there, and it just looks like Europe wants to get squeezed, but the panic isn't on yet. We'll see. It's already starting to get a little chilly in some areas up there. So I don't know, maybe if you're watching this video, if you can comment about what's going on there, that would be helpful, I think, to the community, if you want to say a few words anyway. I appreciate that. Yeah, amazing enough. We'll cover gold next. Amazing enough, gold continues to look fairly decent. We've moved into that 1728 level. We're trading 1729 right now. We're starting to stall right here at this 40-period moving average. But PPM1 is in trend mode. And what we're going to get here probably on Thursday and Friday when we get the updates, we're going to see the 10-period moving average rising through the market grid, which is always a bullish formation. And so use a simple 10 as a guideline, so you can buy against that if you see any moves anywhere close to that number, and it's going up about $4 or $5 per day. So right now you're looking at maybe a 16. we'll call it 1685 to 90 range would be a pretty good buy zone, but starting to look pretty good. Let's take a quick look at the weekly. Weekly's trading all the way up at STX 1737. The highs of 3870 that printed yesterday, I believe. And so we're looking at actually today 1738.70. That's the number. So we just traded RTX. I think we've maxed out, but if you look at the PPMs here on the weekly, they're starting to look good. They looked pretty good last week, and then we had that one more little sell-off down into basically toward the STX level. S2 last week was the low. 1626 was S2. 22 was the actual low. And so we got pretty nice rebound, $100 rebound off of that number. So these indicators are starting to look pretty good. I think yesterday we looked at this. Let's just put GC in here, and it still suggests we've got some noise here. This is weekly. Let's go to the daily. I want to see what this looks like. See what kind of, yeah, we're still looking at PPMs are still expanding in this pattern. So the ultimate would be to get back to the 200-day, but we're trading right at this 40. The forecast is for these PPMs to continue to accelerate. So that 10-period moving average, like I said, that would be your point. If you're not in to buy against that, that should represent a pretty good spot there. Finally, we'll cover Bitcoin. I brought it up in TradingView here. I think this is the Bitfinance. We do have some upward projections coming here out of the tool. This is daily. Looking at first objective here is 2070, next level 2163 and 22,110. Let's go to weekly, take a look at this. All right, that was not good. That's one issue I have with this is that the scaling on TradingView is kind of quirky. Let's go to we'll come over here and just bring this up over here on a weekly. This is weekly, just so we can get a feel for it. Like I've been talking about, we do have resistance right here at the 10-week moving average, 28.15. We've had a high of 24.39, so they're trying to get through there. PPMs are trying to turn up here. There's still got a ways to go. And looking at the forecast on the PPMs, they're suggesting more sideways, still some resistance in here. So I'm not expecting a breakout just yet. But if the correlation factor between the NASDAQ and the Bitcoin continues, then we should see more of a push toward these resistance zones and maybe setting up a bottom that could start to move higher. Okay, folks, that's going to do it for tonight. I hope you enjoyed the show. Please comment, if those of you in Europe, what's going on there and what, as far as the energy situation going, what's the noise that's going around there. It'd be nice to read that, especially if you're watching the rebroadcast. It's easier to find. Anyway, folks, thanks for watching. Remember, get these indicators, get into the live room. I think that's been really effective for a lot of folks to get some exposure to real-time training in the live room with these indicators, especially with these new algorithms coming out. Anyway, folks, see you in the live room tomorrow at 1 o'clock and on YouTube here, same time tomorrow. Thanks a lot for watching. Appreciate it. Quick shout out to Jeffrey Harden. I saw your comment. Yeah, I saw that Bloomberg cutoff. That was pretty interesting.